You found your dream home, your offer was accepted, and your lender tells you you are going into underwriting, and suddenly everybody tells you, do not spend money, do not change jobs, do not finance anything, but nobody has told you why. Today I'm going to show you exactly how to make underwriting as smooth as possible and how to avoid mistakes that can delay or even kill your mortgage. My name is Meika with Zap Mortgage, and every day I help buyers get through underwriting. If you're buying a home or planning to do so soon, please subscribe because I post mortgage tips every single week. Underwriting is when your loan and your file goes from pre-approved to final approval. Underwriters will verify everything, your income, your assets, your liability. They're going to analyze the property itself and the title report. They're going to look at everything and determine if you are qualified to buy this house. Nobody makes final approval for a mortgage to close besides an underwriter, not a loan officer, not a realtor, not an insurance agent, not an appraiser. The underwriter has the final say. And here are 10 ways to make underwriting easy. Number 1 is do not finance anything. When you are pre-approved, your loan officer looked at your debt to income ratio. This is the proportion of expenses to your income. They also looked at your housing expense ratio, and financing different things will make your debt to income ratio increase. We're at the top of the limits for this approval ratio. There's a chance that even financing a new computer or whatever it may be, even if the payment is only $35-40 a month, it still can throw off the entire loan file. Number 2 is do not quit or change your job. This one is incredibly important. You may think if you have a new job offer that you're making the same amount, or maybe you're even making a little bit more. But the thing is, your approval is contingent on the job you had during the pre-approval stage. And if you change jobs, you could be going from a salary to an hourly position. You could be taking a large sign-on bonus, but a lower yearly salary. You could be changing rates of pay. So many things that will change the way your income is calculated. The best course of action is just keep your job until you close on your home. What you do after that is your business, but try and keep the same job. Number 3 is respond quickly to requests. This is very important. The faster that you respond to requests for documents, the faster and smoother your underwriting process will be. And an add-on to this is make sure when you are sending in documents, they are not screenshots, they are not blurry pictures. You need to send in good, clean documents. That's going to be PDFs, that's going to be a fax, that's going to be a scanned in document from the place you're supposed to get it from. You need to make sure that if a document says 1 out of 5 pages, all 5 pages are sent, even if that last page is blank. And you need to make sure that you send in things on time. You never know when you send in a document if an underwriter will request something additional after looking at that. So it's very important that you send things in quick so that if there are any additional items needed, you can then get those in quickly and you're not right up against your closing timeline. Number 4 is do not move money around. Anytime you move money around, questions are created. Any large deposits will need to be sourced or seasoned. Anytime you move something from a 401k into a checking or from a savings into a checking, you now have to provide statements from all of those other accounts. And a lot of times there will be confusion and questions with why this money is being moved around. The best thing to do is once you're pre-approved, turn in all of your asset statements and then keep them there. And then once you are clear to close, if you need to move things around in order to get the money to title for closing, that's when you can do it. Number 5 is keep making payments. This is so important. I have personally had loans be denied because a borrower will stop paying their rent, will stop paying their credit cards because now they are under contract. They've worked on their credit and it doesn't matter anymore. But the thing is, there are many reasons why a underwriter will need a new credit report. And if that new credit report shows new derogatory credit and delinquent accounts, this can affect the overall approval. There are also many loan types where a verification of your housing payment history is needed. So if you do not pay your rent, now your housing payment history is no longer eligible as a compensating factor, as a reason for approval, and your loan could ultimately be denied for that reason. Number 6 is do not open any new credit cards. This again could throw off your debt to income ratio. And the other thing, besides credit cards, that I want to touch on is do not use Affirm, Afterpay, Klarna. These buy before you sell programs where you pay in 4 weeks may not report to your credit, so you think you are fine, but they show up as reoccurring charges on your bank account. So underwriters will want to see your loan terms for this loan. It is a loan you have taken out. And in my experience, Klarna, Afterpay, Affirm, it is very hard to get these loan agreements. Sometimes you're not paying interest. Sometimes they're 4 months. Sometimes they're 6. It's really hard telling. So it's very important that you try and stay away from those. If you're going to buy anything, it needs to just be from your cash or what you have available. Do not open any credit cards. Do not use Affirm and Afterpay. Number 7 is really try to avoid overdrafts. So there is something in the loan origination world called manual downgrading. And what that is, it means your loan was approved through an automated system. And then something has happened or something has been discovered, and now your loan must be manually underwritten. And while there's no problem with manual underwrites, they do take longer. They are more in depth in terms of what is required from you. You have different qualifications, and overdrafting your account is a reason for a manual downgrade of a loan. Number 8 is do not buy furniture. Now this seems like it would be the correct course of action. You go under contract for your dream home, you need to furnish that dream home, so you need to buy furniture. Well, here's the thing. Most of the time, most people, they will finance their furniture. Even if it is through a store card or a store account. Let's say you go to Ashley and they give you a store account. This is how a lot of people are able to buy $5,000 to $10,000 worth of furniture to fill a new house. But again, the problem is now you've opened new credit. So there is a chance that you may have a ton of furniture and no house if you do this. What you want to do is wait till you close. Wait till you close to do anything. Number 9 is be honest from the beginning. The truth is there are so many solutions for almost every problem. And if you are honest about it, your loan officer will be able to guide you in that right direction. But when you hide income, when you hide debts, when you try and hide any public record, these things come up. And if you have a co-borrower, they may not only come up for you, but that person may find out as well. So it's very important. You don't hide anything. Just be upfront. And if it is a reason why your loan can't go through, then you know what to work on. But no, if you lie about it, it probably 99.9% of the time is going to show up. And number 10 is trust your loan officer. Believe me, we want to ask you for as little documentation, send you as little requests as humanly possible. But the truth is, we do not ask for anything that is not needed for final approval. Loan officer requests are not busy work. They are not pulled out of a hat and assigned randomly. These are specific requests from mortgage lenders and from investors. And so it's very important that you give these quickly, you understand and trust that we are not trying to put you through a hard time. We're trying to help you close on your home. Underwriting does not have to be scary. Most loans will close without any major issues when borrowers know what to expect and how to avoid these common mistakes. I do have a few rapid fire bonus tips here. 1, save every pay stub from the time you are pre-approved. 2, do not co-sign for anybody for anything under any circumstances. And if you do co-sign, know that you are willing to give up your home buying experience to co-sign on their car or whatever it may be. Number 3, do not deposit cash if possible. If you are going to deposit cash, source where that cash came from. If you sold a motorcycle, get a bill of sale. If you got paid in cash from a job, ask them for some kind of pay stub to show that this is why you were paid. Keep enough money in your account to cover your down payment, your closing costs, and any required reserves. Your loan officer will tell you all of this information. And last is ask questions before you make a financial decision. This is a huge deal. It is, again, the biggest purchase you're probably ever going to make and ever finance. Ask questions so that you don't run in to any kind of denial situation. If you are thinking about buying a home, or even if you're just wondering whether or not you are ready, I would love to help out. My contact information and my application link are in the description below, and if there are any other topics that you would like for me to cover, you can leave them in the comments, and I will see you next week.